Hi guys, welcome to another episode of the Peace and Profits Podcast. I'm your host, Kendra James Anderson, and today we are talking all things cash flow and how cash flow and profit is not the same. You have probably heard someone saying that they're profitable, but that their bank account still felt a little tight, or maybe that's you. And a lot of times that happens because there's this misunderstanding that profitability and cash flow are one and the same, and they are not. So today we are going to dive into the difference between cash flow and profit. While they are both very important, but they are not the same. So let's get started. So first, let's start by just defining what they are. So cash flow, simply put, is the money that's going in and out of your business, while profitability is what is left from your revenue after all of your expenses are paid. So it might sound the same, but we'll get into an actual example that explains and shows you how they're not the same. So one reason that this can get confusing is because you can show a profit, but still be very tight on cash or not have cash at all. And one example of this is if you're showing profitability, but you have all of your money tied up in inventory. So if you're a product-based business, then you understand that you're buying your product in advance, it's sitting in inventory, and then you're waiting for it to sell. Well, your cash might actually be tied up in inventory. We have seen folks who have $1 million of inventory on their balance sheet, which is not a profit or P&L number, which we'll get into that in a little bit. Maybe not going to get in the weeds into accounting, I promise. But if your cash is tied up in inventory, then you can definitely have a situation where you're showing profit, but you don't have cash flow. Now, conversely, on the other end, you can have cash, but not show a profit. So if you've been paid in advance for certain work and your expenses are actually higher than the money that's coming in or than the revenue that you're claiming, then you can actually have cash and not be profitable. So I did do an actual visual example of this. It's going to go up on our Instagram stories and our Instagram reels later this week. So definitely go check that out. We're going to input that clip into this video. So if you're watching this on YouTube, you'll be able to see it. If you're listening to this in the podcast, and if it's tough to follow along, audio only, then definitely make sure you go check out that reel later or the YouTube video. But I try to keep the numbers relatively simple to make it easy, even if you're just listening to this on your car ride. Okay, so let's see if I can use this whiteboard to show you how profits and cash flow are not one and the same. So let's say that you are a business, maybe you are a marketing agency, and you have invoiced $100,000 in a month. So you made this $100,000 in that month as far as invoicing and revenue is concerned. Well, let's say that you also spent $60,000 for expenses. So maybe contractors or professional services, maybe you have a brick and mortar and you pay rent, utilities, things of that nature. That leaves you with $40K of profit in that month, right? Well, I said that you are invoicing this $100K. That doesn't necessarily mean that you collected all $100K this month. Maybe you just take deposits and then you take the balance at the end, or maybe you have a 3-month payment plan option or something like that. So let's say out of this $100K, you only actually collected $50K, okay? And then you still spent this $60K for expenses. Well, that actually leaves you with a negative $10K. So your bank account in the month actually went down $10K, even though you're showing this $40,000 of profit. That is how you can have these amazing months on your profit and loss statement showing all of this profitability, but your bank account still feel really tight. Now, another example of this, to even add on to this, is let's say that you're an LLC, not yet an S corporation, and you're still taking owner's draw. So you're not paying yourself via a payroll. You're actually just taking owner's draws as the owner. Not to get in the weeds, but one is a balance sheet item, one is a profit and loss item. So if you had this example where you built this $100K, you spent $60K of expenses, and you're left with a $40K profit, and then you take $10,000 for your owner's compensation that month as a draw, well, that $10,000 is not part of this $40K. Again, one's balance sheet, one's profit and loss. Won't get into the weeds of that. But what I'm saying is you might have this $40K profit on your P&L, but in actuality, you actually took another $10K from cash that's not reflecting there. So again, just another example of how you can show strong profits, but still have a really tight bank account. And this is why you really need the support of a team to to help you understand your books from an accounting perspective and your compensation planning and your forecasting and all the things from a finance perspective. And we're obviously here to help you with that. Okay, so now that we understand the differences, let's talk about what you should do. So like, how do smart CEOs handle cash flow and profit? So for one, you want to track both of them separately. So if you are keeping up with your books and you have an accountant or a fractional CFO or even a bookkeeper, if you're keeping up with your books on the day-to-day, then you will actually be able to pull your cash flow and your profitability at any given point, which is key. So you don't want to just look at your books once a quarter or just have somebody, updating your QuickBooks once a quarter or once a year at tax time. No. Remember, taxes is a year-long game and it's not a quarterly or end of the year season, but you want to be able to track both of them separately. So again, keep track of your financials. If you do that, then you'll be able to pull your cash flow statements and pull your P&L, which shows your profitability at any given point, which is key. Another thing is you want to track your cash flow and look at your cash flow weekly. So you have money going in and out of your business probably daily. And so it's very important to keep a pulse on the cash in your business, because not only do you know how much money you have in your business as of today, you likely have future payments already like earmarked, right? You have payroll that's going to be coming up. You have vendor payments that you have sent and scheduled to get paid later in the future. So it's very important for you to keep a solid pulse on your cash flow often, because of the fact that there's so many transactions and so much money moving in and out, hopefully more moving in than out on a daily basis. So definitely keep track of your cash flow at least weekly. And one way that I suggest doing that is to sit down, have a money date. I always say have a weekly money date. If you're not sure with what a money date is, I'm sure several podcast episodes in the past talking about a money date. I know I have some stuff in my Instagram as well about money dates, but it's essentially a weekly date that you have with your money. You open up your bank account statements, you take a look at what's going on, you get intimately familiar with your financials. You don't have to know the difference between a balance sheet and a profit and loss statement initially. After working with me for a while, you will be very clear on the difference between a P&L and a balance sheet and what they're telling you and the story that your numbers are telling you. But to start, you just need to know, how much money do I have coming in my business? How much is going out? What future payments do I have that are coming up that are scheduled? And that is what you can get with having a weekly money date. Okay, so next is forecasting your profit. So profit is definitely something that you are a lot less likely to review on a weekly basis, but looking at it monthly is a must. So you're going to project or forecast out what your profits are. And the reason why this is important is because it involves revenue planning and expense planning. And oftentimes what I see as a CFO is business owners will get really excited to plan revenue and think of new revenue streams even, but not think about the associated expenses. So, maybe you have a new product that you're launching or a new program that you're launching, and you're very excited about that additional revenue that might come in, but you're not always fully thinking through the additional expenses that are coming with it. Maybe there are contractors, subcontractors that come with that. Maybe there's additional ad spend that comes with that, additional SaaS tools that you might have to pay for. So the goal and the benefit of projecting out your profit and projecting out your revenue and expenses, it forces you to really think through all components versus just like anticipating the additional income. So the last thing I'll leave you with on this is that you want to be able to build a cash reserve based on like your burn rate or your run rate, which essentially is how much money are you spending in your business on a monthly basis. Like, what is your monthly operating expenses? You want to be very clear on what that number is, and then you want to save enough to have that like in your reserves. So let's say that number is $40,000 a month. Well, you need to start with 1 month, $40,000 in cash reserves, build that up to 2 months, build it up to 3 months. But you'll have this cash reserves sitting aside in a bank account, a high yield savings account preferably, so that you're making money on that money. And that is there for you in case something happens in your business and you need to be able to pull from it. But you first have to know what is your run rate. And again, that's something you will know if you have your books kept up to date. Now, there's so much more to know as it pertains to cash flow, but I don't want to get into the weeds and make things complicated. The first thing that I really wanted to do was just give cash flow the respect that it deserves. Oftentimes people talk about profitability, but they don't talk about cash flow, or they just assume that it's one and the same. And so hopefully with this video, it's got your cash flow juices flowing and you are aware of how cash flow and profit are different. They are both very important, and hopefully this helps you in understanding that. And so if so, I would love and really appreciate if you would just shoot me a DM. Let me know what part of this video really resonated with you. If you have any other questions about cash flow or profit, if you have any questions about your cash flow or profit, we are definitely here to help and to support. And with that, I'm going to hop off, go upstairs and play with my rowdy kids. And I'll see you next week on the Peace and Profits podcast. Bye.